Keith Fitz is with us, Money Map Press Chief Investment Strategist. You said on this program, Keith, that there's nowhere to go but up. Well, we hit 22,000. Where to on the upside from here?
We're going to digest a little bit, Stuart. I think traders want to self-induce a little bit of panic before the end of the summer so they can take it higher into 2018.
What happens if we do get something on the growth agenda, like tax cuts this year? Change your forecast?
No, I think it's just going to change the timing. I think we're still going to see a little bit of a panic because that's how they separate people who don't know what they're doing from their money, and then they want to take it higher. Growth is all about the future. If we get that tax cut, those two things line up. I think it's 5 to 8% on the upside.
On the upside, okay, that's interesting. That would be a very big gain on top of what we've already had. Now,
yes, it would.
When I looked at Apple's results yesterday, I found it, okay, they're selling more iPads, iPhone. I got it. But one number that just stuck right out at me was $261.5 billion. That's how much cash Apple has on hand. Nobody has accumulated $250 billion in cash before. Do you have any idea what they might do with it?
You know, I've spent a lot of time over the last few years thinking about this. To me, I think Cook is playing an end game here, a long game. He's looking for an acquisition or a series of acquisitions, and I believe he's doing it to position Apple against Amazon, Facebook, and Alphabet, because they all want into content, they all want into big data. He's going to have to make some buys here, maybe something like Tesla, maybe something like Netflix, maybe a supercomputing company. I don't know. But the point is, I think that's what he's going to do with it, and, you know, then of course there's the building plants in America too. So that's only a couple billion, though. That's change for him.
If we lower the corporate tax rate, and Apple brings some of its $260 billion back from overseas, because that's where it is at the moment, it's overseas. If we reduce our tax rate here and that money comes back to America, surely some of that Apple money would go into Apple itself, buy back its own stock, or maybe raise its dividend. That would be a signal to maybe buy the stock some more.
Well, I think so, because, you know, people forget dividends. People view dividends just as cash flow, Stuart, but really what they are is an implied promise from management that we think we're going to be able to deliver what the investors expect. So if they brought it home and they did do some of that, that would be a huge vote of confidence for Apple and for Tim Cook in particular.
Do you think it's likely that they would do that?
I think there's a lot of things on the deck that have to get changed, not the least of which is health care, taxes, and Congress has got to get out of everybody's way instead of fighting with each other. They're torching the American public just to prove a point with each other, and frankly, I'm tired of it, like a lot of people.
Have you wrapped your arms around $261 billion cash? Because I have not. I can't imagine a pile that big.
It's a humongous number, Stuart, and even I'm having trouble wrapping my mind around it. That's bigger than most countries have on hand.
It is. It really is. I mean, they would be one of the biggest countries in the world if they just stood alone.
They could buy Finland or New Zealand.
They could buy New Zealand.
Exactly.
I have some property in New Zealand. It's for sale. Keith, thanks for joining us. We'll see you again real soon. Thank you very much, sir. All right.